Bitcoin and other cryptocurrencies have hit new highs. I'm going to go over 3 strategies you can use to minimize the taxes you pay when you sell crypto so you can have more money going into your pocket and less money going to the government. I'm Matt Sorensen. Let's build wealth. Now, before I get into strategies, the first thing you need to know is the IRS knows people are making money in crypto. And in fact, on the 1040, one of the first questions they ask you is, have you made any money on cryptocurrency in the tax year? Like, there's a specific box on this on the front page of the 1040. So they're asking this and you need to disclose this on your tax return. But the good news is there's some strategies and loopholes to minimize how much you need to send to the IRS. Now, before I get into the strategies, I want to make sure you understand how the tax rules work when you're selling crypto. There's something called a long-term gain and a rate that applies to that, and there is a short-term gain and a rate that applies to that. So if you've bought crypto and held it longer than 1 year, you pay long-term capital gains rate, which at the federal government is a max rate of 20%. If you've bought and sold crypto in under a year, you have not held it for 12 months, that is considered a short-term capital gain, and you pay tax at your ordinary federal income tax rate. So if you're in a 32% federal income tax bracket for your regular income, that is going to also apply on your cryptocurrency gains. That would be a short-term capital gain because you held it less than a year. Now, on the long-term capital gain, the 20% is only the max rate. See, you actually have a 0% opportunity where, depending on your income, you may have a 0% tax on your capital gains from crypto. This would apply if your income, married filing joint, is $89,000 or less. Now, the next bracket you bump up to for long-term capital gains is 15%. 15% is what applies, again, this is married filing joint, if your income is between $89,000 and $533,000. So a lot of people are actually fit into this bracket that are making money on cryptocurrency right now. They're still not actually paying the full 20% federal rate. And then if you're over the $533,000, you are paying the max federal income tax rate of 20% for any long-term capital gains. Now, short-term just depends on whatever tax bracket you fall into for your regular income. There's no other strategy around it besides saying, maybe I should hold this a little bit longer and get to long-term where I get the better rates if I want to sell and take money out of the crypto. Now, the strategy there, once you understand these rates, is if my income, married filing joint, is below $89,000, I can sell right now, pay 0 tax on the crypto. Now, of course, if you have a $100,000 gain on crypto and you made 80 grand, you actually made $180,000 that year. Okay, that does count in your taxable income here. So now you're in the 15% rate. But as you can see here, there are ways to game this based on your income for the year and deciding whether to sell. Now, at year end right now, that's a great time to do tax planning and look at, if I did sell crypto, what type of gain would I have based on the income I'm planning to have by year end. Now, the second strategy here is once you understand these rates, be very careful of doing short-term capital gains. If you're buying and holding crypto, don't sell it within a 12-month period. Now, maybe you're trading crypto and that's your strategy. That's fine. You're going to be doing short-term capital gains. You actually consider yourself a business and go to trader tax status. There's pros and cons to that. But if you're a trader, you might want to look into that. Those of you that are buying and holding crypto, though, one of the key strategies is make sure you hold it long-term over 12 months. You're going to get into the lower preferred federal tax brackets. All right, now the second strategy you might want to look at, and this is for some more sophisticated high net worth individuals, what they will do is they will take loans against their cryptocurrency. Don't sell the cryptocurrency. If you believe in it growing and building, why would you sell it? If you sell it, you're going to pay taxes on the gains. But if you want to take out the value, you can get a loan against the cryptocurrency. This is the same strategy you can do with real estate or a stock portfolio. You don't sell the asset and take the gain. You get a loan against it. Loans are not income. They're considered debt, which you do have to pay back, but it's against an asset that you haven't sold. It's another strategy sometimes you can do around a highly appreciated asset, which could include crypto. The next strategy on crypto is something called the wash sale rule. This is a rule that says when your crypto goes down in value, you can sell the crypto, lock in the loss, and immediately rebuy it. So back in November of 2022, when there was all the FTX noise, Bitcoin went down to $16,000 per BTC. Now, a lot of our smart investors, we even shot videos and podcasts on this. We said, hey, make sure you lock in your gains now if you believe crypto is going to go up from here. So for example, if you had bought Bitcoin at $40,000 per BTC, it went down to $16,000 per BTC. You could have sold and locked in a $22,000 loss per BTC, but you went and rebought the same BTC at $16,000. Now on your tax return in 2022, you would have picked up this loss of $22,000. It's just a paper loss. You went and rebought the same cryptocurrency. Now for your stock portfolio, you can't do this. You can't sell a stock and rebuy it back the same same day. But this wash sale does not apply to cryptocurrency. It's very specific to the stock market. So I can use the same strategy here for crypto, sell the asset and immediately rebuy it back. I still own the asset, but I lock in the loss whenever it goes down. This is a strategy a lot of our high net worth and tax savvy investors use when the crypto markets go down, which they inevitably do. The market's up and down in crypto. It's very volatile. They sell and they lock in the loss, but they still rebuy the crypto because they believe in crypto going up over time. They don't want to leave crypto, but they want to lock in the tax loss because they know they can use it for a time like now. When the market is up, they want to take some chips off the table or diversify into other crypto or other assets. Now, the next strategy is buying crypto in your Roth IRA. I know a lot of people are like, Roth IRA, Matt? That sounds pretty boring. I can buy stocks and mutual funds with the Roth IRA. Yeah, that is boring, but you know what's cool? Buying crypto in your Roth IRA. Your Roth IRA can own Bitcoin, Ethereum, Solana. It can own cryptocurrencies. My Roth IRA owns that. My health savings account owns crypto. You can invest in real estate and other alternative assets. Don't have to use your retirement account funds that are tax advantaged just to buy stocks, bonds, and mutual funds. You can invest in alternatives such as crypto, and it's what we do every day at our company, Directed IRA. We have a product called a crypto IRA that could be a Roth, a health savings account, a traditional IRA, a SEP IRA, a Roth 401k. These accounts that are tax advantaged. When you're buying and making money in a Roth, you pay no tax, and it comes out entirely tax-free at 59.5. These accounts can be used to buy and sell crypto. The way we do the product is, let's say you got money at TD Ameritrade or Fidelity in your Roth IRA, or you want to make a new Roth IRA contribution of 7K. What you need to do, step one is, you're going to set up a crypto Roth IRA. Now, there's a link below in the description where we got all the details. I wrote some articles on this on Cryptopedia. We have some podcasts and other webinars we've done on the topic, but you're going to open up a crypto Roth IRA. Now, let's say you got money over at Fidelity in a Roth IRA. And you're like, I got $300,000 in a Roth IRA at Fidelity. Maybe want to throw $50,000 into crypto. Well, you can just transfer $50,000 from your Fidelity Roth IRA over to your crypto Roth IRA at Directed. What we do is we have a relationship with Gemini Trust Company. And with Gemini, we can link your crypto IRA to a Gemini wallet, get on the Gemini exchange, and you can go buy and sell whatever crypto you want tax-free. Buy and sell as much as you want. Day trade this thing. Just hold it for the long haul and sell it later when you want to pull the gains out at retirement. If you believe in crypto, this is no investment advice. I don't know what's going to happen to crypto. I've invested in it. But if you believe in it for the long haul and you want to do it in a tax-efficient manner, make sure you're considering one of the most obvious vehicles out there, the Roth IRA. You're just not thinking about it because you've thought all the Roth IRA can do is own stocks, bonds, and mutual funds. Well, that's not true. I wrote a book. It's called The Self-Directed IRA Handbook. IRAs can own real estate, private companies, pre-IPO companies, cryptocurrency. It's an entire chapter in my book on how your IRA, Roth, traditional, HSA, can own cryptocurrency. Now, the last strategy here is called a charitable remainder trust. This is something my tax law firm has done for many clients who have made a significant amount of money in cryptocurrency. And in a charitable remainder trust, what you do is the individual, if you have a lot of crypto that's highly appreciated, this if it's millions of dollars of gains, don't mess with this if it's under that. But if you've got a significant portfolio of crypto, you have some charitable purpose, you want to be tax efficient and get a stream of income from this, you can use the charitable remainder trust. What happens is you set up this charitable remainder trust called a CRT. You're going to donate your crypto into that charitable remainder trust. Let's say it's Bitcoin. The trustee of the trust is then going to sell that cryptocurrency. There's zero tax on the sale, even though it may be highly appreciated, but there's zero tax on it because the charitable remainder trust is going to a charity at the end of the day. So there's no tax on this strategy. Now, the benefits for you are you get a tax deduction of the fair market value of the crypto that you put into the trust. So if it's $1 million worth of Bitcoin right now, whatever the market price is, when you put it into the trust, you get $1 million charitable deduction on your 1040. Now, the second thing you get out of this is a stream of income from the charitable remainder trust to you over your lifetime up to 20 years. And that's a nice way where you get income off of this asset, but I still got the tax deduction for it on the front end. Now, the third thing on this is life insurance. So you can get a life insurance policy on your life because your heirs and family might be like, hey, mom or dad, you guys sold the crypto? I would have liked to inherit that. Well, now the CRT is paying for a life insurance policy on your life so that they still benefit upon your passing, which could be somewhat equal to the value of this. Now, this is a very complex strategy. I have broken it down in a very, very basic way here. We have other videos and podcasts where we've gotten into this. My partner, Mark Kohler and Max Merritt and our law firm have also done this strategy, but it's one if you have a significant amount of crypto that you personally own. It is a way to make a tax efficient charitable contribution. You want to have some charitable purpose to this, get some significant tax deductions, a stream of income, and replace that asset in your estate with life insurance. It's a cool strategy. Doesn't work for everyone. The last one I wanted to throw out here for you today. Now, there's so much more to building wealth, whether it's in cryptocurrency, real estate, growing and scaling businesses, finances, investing properly. It's what I'm talking about on my channel every day. Please make sure you're subscribed. I'm Matt Sorensen. We'll see you next time.